Are you? By chance, driving down. I do. Because I don't know how to do it.
Okay, I'm gonna go ahead and take roll today.
I just can't wait for this classes to be done.
All right,
because then I'm going
Mason.
to
Catherine Bissett, Lauren Blunt, Taylor, Hannah Breeding, Nathan, Amber, Ambrose, Nicholas Crum, Jacob, Reagan Duggan, Andrew, Matthew Brunswick. Where are you at? I knew Reagan had gone to the 10 o'clock, so I didn't know. I thought you were going to raise your hand for right now. Sorry, guys.
I went to
where are we? Lauren, Elizabeth Hughes, Emma Johnson. There you are. Okay, right, Isaiah, Josiah. Isaiah's a basketball player for the Pistons. No. But anyways, okay, Luke. Here. Okay, John Lanning. Here. John McCarthy. Morgan. John Ortman. Tyler. Christine. Tanner. Tanner Sizemore. Sophia. Noah. Oh wait, I know what's going on. Okay, Andrew. And Frank Vital. And Stephen Whitney. All right. Last time we were talking about the corporation and the idea that in the period 1750 to 1880, you could expand the size of your corporation through retained earnings, basically. But by the time you get to 1880, the corporation has now become the dominant way of organizing. And corporations started in Great Britain, where they sort of needed to start in 1834, and then in Connecticut in 1839. And what were they about? The idea was, if I'm trying to expand the size of my business, one way I can do it is I could go out and find a bank to lend me the money to do that. I could find an individual might be wanting to do that. And credit and banking, of course, developed in this 1450 to 1750. And one of the things that Brazil and Rosenberg were talking about is how this expanded the ability to make this decentralization there's a decentralization of the ability to make investment. That is sort of the economic view of investment, which is to add machinery or to build a factory or to do things which are going to expand the ability of your firm to produce. So we have developed this idea of credit banking, but by the time we get to mid-19th century, the factory system is getting to where now, in order for me to expand the factory, I got to go get money somewhere. So one way I would, up until this period, the way I'd get money is I could go to a few lenders and to ask for all the money at once, or I could just try to earn it through retained earnings, but I didn't have a real good mechanism to go out and try to get a little bit from a lot of people. So what we developed is the idea of the corporation as an entity that we said could own stock and that could own stock and could enter into contracts and do things like this. So they become an entity. And they title this section Diversity of Enterprise, right? So now what we have is not only do we have small firms, but now we have a corporation, and what is key to a corporation is two aspects to it. One is that there's stock in the corporation. And what does that mean? It means that you own it. You're the owner. If you're a stockholder, then you're an owner. So if you own 100 shares of Bed Bath & Beyond stock, sort of a bummer for you if you do. If you own 100 shares of Bed Bath & Beyond stock, and let's say there's 1 million shares out there, then you are 100 over 1 million owner of the entire Bed Bath & Beyond. All the assets of Bed Bath & Beyond, you actually own a little tiny piece of that. What you can do is you will, if you own stock, what will happen is you'll get a letter telling you about the annual stockholders meeting where they're going to go discuss all the things that they're going to do. And you can go to the meeting, and if you have 100 shares and there's 1 million shares out there, you can vote your 100 shares, and other people that own their shares can vote their shares on whatever the proposal is. And normally you vote for the board of directors. And the board of directors go out and they hire the chief executive officer and all the people that are the executives of the company. So you could go out and you could go to the stockholders meeting, you can vote for all the boards of directors, but typically what will happen is if you own 100 shares of Bed Bath & Beyond stock and there's 1 million shares out there, you're going to say, well, gee, the probability of my affecting the outcome is relatively low. The marginal cost to me of going out there is going to be relatively high. I'm going to be rationally ignorant about these proposals because I have not been really involved in figuring out exactly what's going on with Bed Bath & Beyond. And so I'm not likely to go. You can send your ballot in yourself. You don't have to go to the meeting. When you get your announcement, it'll have a form where you can send your vote in, or you could have what's called a proxy. That is, you could assign your vote to somebody else that you think knows more about it than you do. Generally, it means that you would assign it to the existing board of directors. You would say, okay, I think they're going to be able to know more about this than the average person is, and so I'm happy with how the stock's doing. I'm just going to let the board of directors make these decisions. Currently, Bed Bath & Beyond is in a fight where you have a block of investors that is attempting to get rid of the entire board of directors of Bed Bath & Beyond and put a new board of directors in. And the question would be, is that group of these investors able to gather up enough shares to be able to vote and get rid of the existing board of directors? So I don't know if you probably don't own Bed Bath & Beyond stock, but it's lost about 75% of its value in the last few years. And so there's an existing set of stockholders that you could just sell your stock, right? If you're not happy with it, you could just say, hey, I'm not happy with what's going on with Bed Bath & Beyond, I can sell my stock. Someone else is going to have to want to buy your stock, but there's a market out there, right? The NASDAQ or the Dow Jones, you can sell through that organization. Now, if you're not happy, you'll probably more likely sell your stock. That's normally what happens. But you actually have a decision about whether you're going to whether you're going to sell your stock or whether you're going to try to get together with a whole bunch of other investors, which is what this group is doing. They're getting together with a bunch of investors to say, hey, let's get together and vote our block of stock and get rid of everybody that's on Bed Bath and Beyond. Now, one of the aspects of this thing that's important is these are called what's called C corporations. And they, you can buy their stock on the stock market. Again, we noted that when you buy a stock from somebody else, then that doesn't affect the amount of money that the company has to expand. When they do initial public offering, like Uber's going to be doing, when Uber sells its IPO, it's going to take that money and it's going to then expand whatever Uber does. But then once that stock's out there, once that IPO's out there, what they do is they set, here's how many shares of stock are going to be in this initial public offering. And notice that what happens there is you get this decentralization, right? You have this decentralization of decision making because now instead of going to, you have this decision making about investment, rather than me having to raise, if I'm Uber and I want to expand the size of Uber, rather than me having to go to 4 or 5 major investment firms that might, or banks that might buy the stock, not buy the stock, that might loan me the money, okay? What I can do is I can go out and get lots and lots of you people to have just a little bit, right? So you might be much more willing to invest $40 in Uber than to loan them $40 million. And you could decide how much you want to get involved. If you want to buy 1,000 shares, or want to buy 50 shares, or 100 shares, or whatever. And so now, instead of going to a few people, I'm going to lots of people and seeing if lots of people are willing to buy the stock. Again, the IPO is the mechanism by which the company is able to obtain income or attain revenue in order to expand. One of the interesting aspects of the C corporation is that it has limited liability. Again, companies are incorporated under various state statutes, but a C corporation has limited liability. What that means is, if you buy, let's say you buy Uber stock, okay, well, it's more exact. You buy Kodak stock, okay, so. Buy Kodak stock, what happened to Kodak? It went bankrupt, right? And so when Kodak failed, the assets of Kodak were less than the liabilities of Kodak. Now, if you own Kodak stock, they can't come to you and say, oh, we're 100 million short. You, as a 50% stockholder, you have to give half of that out of your own assets in order to satisfy the people that own the liability. Okay, your liability is limited to the value of the stock. If you own Kodak stock and it goes bankrupt, your stock value goes to zero, but you don't have any. You don't owe anything. That was not true of Jiminy Cricket and Geppetto, right? When Geppetto's Clockworks. If Geppetto's Clockworks had a problem, then Jiminy Cricket might have to pay part of that. If you are Mary Beth's, downtown Hillsdale, right? Mary Beth Watkins owns Mary Beth's, okay? If that is a sole proprietorship, then if Mary Beth Watkins' store ends up failing and there is the assets of the store are $50,000 short of the liabilities of the store, Mary Beth Watkins could have to pay the $50,000. Partnerships work that way as well. If you, law firms, generally law firms are partnerships. Under a partnership, if you are Miller Canfield, which is a law firm major law firm in Lansing, Miller Canfield, if you're a partner in Miller Canfield and Miller Canfield goes bankrupt, then you might be liable for part of the losses that Miller Canfield had. But if you're a corporation that's limited liability, you're not liable. There has, in the last, 30 years or so, there was a development of what's called LLC. I don't know if you've ever seen somebody that's got a firm that's, you'll see the name LLC by it. LLC stands for Limited Liability Corporation. And a number of states have set up limited liability corporations. So you don't sell your stock, but you have stockholders who are, let's say, you and the rest of your family or some of the people you work with. You go out and you form this limited liability corporation, and it says here's who the owners of the company are. Okay, but it is like a C corp in the sense that you're not liable. If Mary Beth, let's say Steve Veer, who's got an accounting firm down here in downtown. If it becomes, I don't know how Steve's got it organized, but if it were Hillsdale Accounting LLC, then Steve Veer would not be liable for if Hillsdale LLC folded and had more liabilities than assets, Steve Veer would not be liable for that. So limited liability corporations are a sort of a newer way of what happened in the middle of the 19th century. This idea of I could have a company, a firm distinct from an individual. People could own shares in it, and they would have limited liability. So what did that do? That greatly expanded the willingness to invest in firms. Right? And so, by the time, again, where does this start out? This starts out in the 1830s, right? So where we first started out. We said by 1897, New Jersey now allows corporations to move across state lines. By this period, 1880 to 1913, that's the period where, just as the period 1450 to 1750, we had moved towards the trading cities, we had moved towards the corporate organization as being the dominant organization, particularly in manufacturing. This is also a period where manufacturing passes agriculture in total output. Prior to 1880, the agricultural sector was the largest producer of value in the United States economy. 1880, manufacturing becomes the dominant, the dominant part of the economy in terms of total output. Today, the service sector has passed manufacturing in the total amount of output. Now, we still produce a lot in manufacturing in the United States. As I said, times before, that we produce more cars in the United States today than we ever did. We just use 1/3 the labor that we did before because we've substituted capital for labor. We've substituted robots for people, doing things. But our service sector is still larger in terms of total output than manufacturing. We still have a large, because the economy is much larger, right? We have a $20 trillion economy. We'll talk more about that on Friday. But we have about a $20 trillion economy, so it's very large. Notice that if I said to you, here's a country, and its largest sector in terms of total output is agriculture, you're going to go, that must be a poor country, right? You look around Western Europe or look around the United States or whatever, you're not going to say, oh yeah, their agriculture sector is their largest sector. Thomas Jefferson, he doesn't know, right? Thomas Jefferson thinks we're all going to be, farmers for I don't know if he thought we were going to be farmers forever. He probably wasn't thinking, oh my gosh, who's going to be making the cell phones 300 years from now? But nonetheless, in the period of the late 1700s, agriculture was the dominant. Notice what's going on in China, just like everything else we've been talking about. China, if this were 1965, the largest sector in China was going to be agriculture. 1978, what happens? Special enterprise zones come in, China starts moving towards market capitalism, particularly on the eastern coast. And so what happens? Manufacturing is now the dominant output is in manufacturing in China. Notice that their service sector is now expanding. And manufacturing is now, China's doing a bunch of its manufacturing over in the Philippines and the like. So China is moving very quickly through the same, what we did historically, again in centuries. China's doing it in a decade. China went from early 1970s, primarily agricultural, to primarily manufacturing today, but with a movement towards the service sector. The service sector is getting larger and larger and larger in China. On page 235, Brazil and Rosenberg define capitalism as the decentralized authority over investment to a substantial number of individuals to make personal gains of if their decisions are correct, and losses of their decisions if their decisions are wrong, and who lack economic or political power to prevent others from proving them wrong. Okay, so again, sort of think through this. What are they talking about? You have decentralization of decision making, and you have responsibility, right? So again, capitalism is the decentralized authority over investment to a substantial number of individuals who stand to make personal gains if their decisions are correct, losses of the decisions are wrong, or lack economic and political power to prevent others from proving them wrong. Notice, this is again, Brazil and Rosenberg are talking, here's what happened historically, and exactly what Hayek was saying. Here's the theory about what do you need for market capitalism to work and make the best use of decentralized information, right? What does Hayek say? Information is decentralized. The best way to do that is you guys all act according to your own plan. We're going to let you guys all make the decisions. And then there's a whole chapter on responsibility that says you got to be responsible for your actions. And what happened in the West? Exactly that. All along the way, we keep seeing a development of this decentralization of decision making at various stages. You have different ways of doing it, but notice that they entitled this section, Brazil and Rosenberg entitled this section they're talking about diversity of organization, right? And what is this diversity of organization? It's just different ways of being able to make the production process work. I can have an individual firm if I want. If I want to open up Steve Veer Accounting, I can do that. Or I could have Steve Veer LLC, or I could eventually get big enough to go out and say, okay, I'm going to issue stock because now I need to make, I've got 15 Steve Veer Accounting places all around the country, and so now I need some money to expand. Guess what? I'll have stock. That's what Lyft just did, and Uber, and Fitbit, and Facebook. I think Facebook's only been out there for 15 years. I think this is the 15th anniversary of Facebook. These things but by needing to, and notice, why does Facebook need to go out there? Why does Uber need to go out there? Because they've got lots and lots of customers. How many of you have ever taken an Uber? It's amazing. I've even taken an Uber. I even have it on my phone, but I've only done it with my son helping me do it. Seems to get a taxi in my world. But anyway, you guys all raise your hand. Why did Uber need to go out and have an initial public offering? Why are they doing that? They're doing that because they need to get more revenue to be able to expand. And so what's going to happen? They're going to sell their stock, and some of you may be part owners in Uber, the company. If you buy a share of Uber, then you'll be able to be a stockholder in Uber. So then the chapter when they're discussing Western science is very similar to what we've been talking about. What is science about, right? Why do you get science advancing the West? Remember, I said that when you go to study for the final, you might want to go back and look at the introductory chapter to How the West Grew Rich, because they talk about all this stuff in that introductory chapter. But why when they were talking about all the things that could have led to economic growth other than market capitalism, they said, well, what about science? But they said, well, but science was there, the West was way behind in science for centuries. Why did it start to become the leader in science? And the point is that science is driven by the capitalist system, right? That is, you need to get a reward for innovation. Now there's some general science that, when you talk about some sort of general science that maybe you might have the government do. There's a whole theory about what's called positive externalities of science. So, for example, I don't know if you noticed this, but they just took a picture of the black hole. Anybody heard of that, right? So, took a picture of the black hole. Well, probably some private company doesn't have a way to monetize taking pictures of the black hole. And so, but what might happen is if they somehow learn stuff from taking pictures of the black hole that might become monetized, that is, then the government will have created what we call a positive externality. So it might be some science that is government related, but the vast majority of science isn't that way. The vast majority of science is driven by this reward for innovation. So when we were talking about profit, for example, what you want to reward people for taking out the risk of innovation. So just as an example, you have John D. Rockefeller, right? Buys up all this land in Ohio and the rights to drill for oil in Ohio. Well, what's the bummer? You can't refine this stuff, right? Because it's got too much sulfur in it. So what did John D. Rockefeller do? He hired a bunch of scientists to figure out how to refine the oil, right? So we got scientific advancement, but why did the scientific advancement happen? Because there was a reward for thinking about how to do that, right? Advancements in artificial intelligence, okay? They're not just happening out of the blue. Somebody like Amazon is going to say, hey, I'm going to invent something that having to do with artificial intelligence, so I can tell whenever you click on your Amazon thing and you look at ads for something, you'll get an email from Amazon saying, oh my gosh, do this, that, and the other thing, right? Or what's the name of the Amazon machine?
Alexa.
Oh, yeah, Alexa. Alexa's listening to everything you say, no question. Okay, like somehow, it's not listening until you say Alexa. Yeah, really. So what do they know, right? You're talking about, gee, I really want to have some. I really enjoy flounder. Okay, well, guess what? If you're talking to your wife, or your wife's talking to her husband or whatever, really, I just want to, flounder is really something I want to be looking at. Guess what? You start getting ads when you get on Amazon, the ad for flounder or whatever. Okay? So, who's developing all that? Is it, it's not the government's out there thinking, oh, we should do that. No, it's when Amazon's doing it and everybody else is doing it, right? The advances in artificial intelligence are coming about not from. I take that back. Yeah, the Democratic Republic of Congo has just made huge advances in artificial intelligence. right? All these countries in sub-Saharan Africa, they're the ones that are the lead in artificial intelligence. Right. Yeah, we're looking to North Vietnam. That's where the artificial intelligence is popping out of there, right? No, it's not going to happen. When do we get the Ebola vaccine, right? The Ebola vaccine happens when somebody lands in the United States with Ebola. And then the pharmaceutical companies start saying, well, hey, maybe we should start, not a lot of people in Congo can afford Ebola vaccines, okay? So I'm not going to start thinking about making Ebola vaccines until, oh, wow, maybe it's the United States people can afford the thing, afford the thing. Or maybe somebody who's very rich will buy up the Ebola vaccine and distribute it to poor people, right? So all the point here, this whole chapter on Western science is about that. What really is it? Market capitalism is in fact, they summarize this, in fact. This is on page 267. They say, there is no way to imitate Western organization of innovation without also imitating Western decentralization of enterprise, with the authority to make decisions diffused into a multitude of enterprises of various sizes, ownership, internal structure, and location. Enterprises have to keep the benefit their rewards and bear the burden of their successes, right? Again, a very Hayekian statement. How do you get science? Science comes about, if you are, again, head of the, just been appointed head of Afghanistan, and you say, okay, I want to turn it into a market system, and we're all going to become wealthy. How's science going to develop in Afghanistan? The only way to have scientific advancement in Afghanistan is to take on how you organize your resources. What they said is the only way you can do it is to imitate Western decentralization of enterprise. We talked about all this diffusion of, from the firm distinct from the individual to trading firms to corporations that can do whatever they want. With authority to make decisions to fuse into a multitude of enterprises of various sizes, ownership, internal structure, and location. And they have to keep the benefits of the rewards and suffer the consequences of their failures. So again, Bertel and Rosenberg saying something that if we look at historically, here's what happened, and it looks very, very Hayekian. All right, so that leads us into the last section of history, 1913 to the present. If you, A Capitalist Manifesto, chapters 13 and 14 cover what we just, basically our summary of how the West grew rich. But if we look at 1913 to the present, what happened, what was the major characteristic of that period was an increase in the size of government. If you look back to 1913 and you say, okay, how much was government intervening? It was intervening in the economy, but nothing like it does today, right? It wasn't out there telling you, oh, here's how many miles per gallon your car has to get. They didn't have cars in 1913, so not many. They had some, but the government wasn't, nobody was thinking, oh yeah, one day the government's going to tell us how many miles per gallon our car's got to get. It wasn't telling you can't have trans fats in your, your French fries. It wasn't telling you you can't have the use of anabolic steroids in baseball. Okay, so all these things, government expands in this period from 1913 on. Prior to 1913, you had, remember, Mises was saying that classical liberalism was the dominant political philosophy in this period up until the middle part of the decade of 1910, right? When did Mises, remember this, I've said it a million times, when did Mises write liberalism? What year did he write liberalism? Can't believe I said it like 1,000 times, right? Yeah.
Was it 1921?
Close. 1927, right? That was the point, wasn't it? That 1927, he writes liberalism. 1928, he says we're going to have the Great Depression. In 1928, the Great Depression happens, right? He says we're going to have World War II. 1936, World War II starts. He says that the fascists are going to start World War II. 1936, who starts World War II? Mussolini, a fascist government in Italy. He says that prohibition is going to fail. And what happens? We repeal the amendment that created prohibition. So what is what is he seeing? He's seeing a change in the attitude of people's belief in what the role of government is. And when does that happen? This change in the belief of the role of government, he's seeing happen right about this period, right? He's seeing the rise of fascism in Germany and Italy and Spain, and he's seeing the rise of socialism in Russia and then Great Britain. He's seeing progressivism in the United States. He's seeing all these, this movement towards a different political philosophy. What did he call it? Anti-liberal thought, right? He says anti-liberal thought's going to cause all these things. And so when do we get this expansion of the role of government? We get this expansion of the role of government when we get this change in the belief about what the role of government ought to be, right? The change in philosophy. And that's why he wrote the book, right? It's called Liberalism in the Classical Tradition. He's saying that anti-liberal thought is going to cause all these problems. So, just to give you an idea about what happened there, if we look at 1913, the government, your federal government, United States, was about 2% of economic output. We'll define this more precisely on Friday when we talk about gross domestic product. But basically, the size of the economy. We can think of the government not counting the regulatory aspect, but as the size of the economy, they were spending about 2% of the total output. Today, it is greater than 20%, about 21% right now. So your federal government is spending about 20% of the total spending that's going on in the United States. So your federal government not only got bigger, but relative to the size of the economy, your federal government is 10 times larger just in its taxation and spending pattern. That doesn't count all the regulatory aspects of your federal government. So if this were 1913, you'd be thinking, okay, what's the proper role of government? You know, you'd be a classical liberal in general, and the government would be relatively small. Today, if you're running for president, you could easily be a democratic socialist, right? So Bernie Sanders is clearly not a classical liberal, nor are Elizabeth Warren or a whole number of the people that are running for president. They're not classical liberals. And what is their view of what the role of government ought to be? It ought to be even bigger than it is. So we've got this expansion in the government that's happened since 1913. If we look at the federal debt, your federal debt in 1940, okay, so right before World War II, your federal debt was $50 billion. Today, your federal debt is greater than $20 trillion. Okay? So 1940, right before World War II, $50 billion is your total federal debt. This year, your government's going to run a deficit of $1 trillion. In the first 4 years of the Obama administration, you ran deficits of $1 trillion. You didn't get $1 a $1 trillion budget until Ronald Reagan was president. So, of course, prices have changed since 1940, but not on this order. $50 billion to $20 trillion. That's a massive increase in what your federal debt is. Not only that, but that doesn't include what's called the unfunded liabilities. The unfunded liabilities of Social Security and Medicare. How does that work? Well, the Social Security Act says that if you qualify, if you're a certain age, and you've got a certain amount of income, you will qualify to receive benefits from the federal government. Medicare, if you are 65, then you have benefits from the federal government. We're going to pay for, we're going to basically provide you an insurance company, and that insurance company charges a small amount of premium. The money that's coming in, the Social Security Trust puts out annually an analysis of what the Medicare and Social Security Trust look like. And in the last issue, or the last year's statement, they looked at, here's what the promises are, and here's what the revenues coming in are. And we're going to make our best estimate of what the promises are and what the revenues coming in are. The promises exceed the revenue that's coming in over the next 75 years of $35 trillion. And that number's been going up, okay? So what does that say? It says that you guys have made promises in excess of $35 trillion of what you're being taxed on right now. So not only does your federal government have a debt of $20 trillion, it's got a unfunded liability of another $35 trillion. And let's say you were 20 years old. You'd be going, hooky smokes, Bullwinkle, how's that all going to get paid for? And if you're 75 years old, you go, what do I care? Right? I'm not going to be around when the unfunded liability comes due. But in any event, so what does that tell you? It tells you that government has gotten very large relative to the size of the economy, and your federal government is not only spending a lot of money, but it is spending money that it hasn't raised yet. And we'll look more when we, on the last 4 classes, when we do the macroeconomics piece, we'll talk more about what happens when the government runs deficits and that sort of thing in those last 4 lectures. If we look at, about 40%, just last data point, about 40% of household earnings are taxed at the federal, state, and local level. So, on average, about 40% of whatever you earn is being shunted off to the government. And what that really sort of means is if you had a 2-earner household and one of them earns 60% of the household's earnings and the other 40%, that the other person worked the entire year in order to pay the taxes for the household together. So your government is very much larger than it was in 1913. So what happened in 1913 that changed people's attitudes, and what happened institutionally to make it happen, to advance the ability of the federal government. So you had some attitudinal change, and these were basically historical events. And they were World War I, the Great Depression, and World War II. people's attitudes about what the size and scope of your government are changed with these historical events. Remember that we don't enter World War I until late in the war. But we eventually enter World War I, and the idea now starts to become, well, maybe the United States should be concerned with not only itself, but also be concerned with what's happening other places. And maybe we should say, well, maybe the government ought to have a little more control over what's going on with the railroads because we might have to be involved in another war. And so people's, again, one of the reasons that we founded the country was in order to protect its citizens, right? That was one of the reasons for the, for the Federalist system. That's why the Articles of Confederation didn't serve out very well. Second thing was the Great Depression. And what happened here was this idea, are markets stable? And we have a period, again, 1928 to 1936, guess what? We've got still very high unemployment rates from 1928 to 1936. John Maynard Keynes comes along and and we'll spend a good deal of time in the next 4 classes about what Keynes talked about. 1936, he writes the general theory, where he says, you know what? The classical economists would say, how could we possibly have long periods where the supply of labor is in excess of the demand for labor, right? If I said supply of labor is much bigger than the demand for labor, what would we expect to happen? Well, we expect wages to fall, right? And as wages fell, quantity supply of labor would go down, quantity demand of labor go up, so we'd expect to get the equilibrium. But now what do you got? Now you got this period from 1928 to 1936, you got 8 years and you haven't come into equilibrium yet. You also have excess supply of goods and services. So what's going on there, right? We should have seen prices fall. And so what Keynes comes about and he says, well, prices are sticky. Prices and wages are sticky. They don't move like the sticky downwards. They don't want to fall down. So the economy can get stuck at an equilibrium where you've got excess supply of labor and excess supply of stuff. And again, we'll go through the Keynes' story about what the government ought to do. But the point is that the government can intervene, and you need the government to intervene. The government will intervene in order to deal with the fact that markets are unstable. Then the last piece the last event was World War II, which expanded what was going on in World War I. World War II down here. And I have in the Wolfram folder an Imprimis article by John Wilson, who was he's a moderately recently retired history professor, and it's on World War II and the expansion of government, right? This attitude. This article is how World War II changed our attitude about what the size and scope of government could be. And you go to see that. Maybe we think that, wow, we should have tariffs on steel because we want to make sure that if there's a war, we're not relying on someone else for the steel. Or maybe we should have it so that the government controls what the railroads can do, or the government controls manufacturing so we can make sure we have enough planes and tanks and everything else. So you might want to just take a look at John Wilson's piece there. All right, so for Friday what we'll do is we'll talk about 3 institutional changes that happened during this period, which were the 16th Amendment, 17th Amendment, and the Federal Reserve. And then we will start the macroeconomics, which will basically be definitional to start with. Gross domestic product, etc. So you want to take a look at chapter 15 in a Capitalist Manifesto and make sure you finish chapters 13 and 14. I did catch that.
Why don't you want to know